Hey there folks, the idea of property investment can feel, well, pretty overwhelming. But how can NDIS properties build a pathway to wealth creation? I'm Aaron Young.
I'm Andrew Woodward, and Investment Insights starts now.
And welcome to the program. Great to be with you and great to have you here, of course. Presented by The Investor's Way, where each episode we dive into the world of wealth creation and provide practical tips of how you can master your money. Now, in a recent episode, I know you were involved in this one, of Investment Insights, the discussion was about social benefits of the NDIS scheme.
And so today we're speaking with Maria Micallef from Property Investor Store, and we're going to explore NDIS properties from an investing perspective. So why should someone invest in NDIS properties?
Well, what's interesting about NDIS investments is that since interest rates have gone up, people have been seeking out properties that offer high returns. So yields have been impacted with interest rates, and it's very difficult to get a positively geared property these days. So the NDIS investment, purely because of the income it generates, has been attractive to investors. And the fact that it's also government funded means that that income comes in regularly each year.
Can you explain to us, for those who maybe aren't aware, exactly what is an NDIS property?
An NDIS property, it actually is SDA. It's Specialist Disability Accommodation, which is one section within the NDIS. And the idea is the government has incentivised people to build these properties to get people with disabilities out of facilities that aren't geared for people with disabilities. So we're getting them out of nursing homes and hospitals, which is costing the taxpayer up to $500,000 per person. And instead, they're rewarding those investors by building homes purpose-built for the different levels of disability.
Yeah, and you and I, we've spoken a lot about NDIS properties and the benefits that they can provide to the investor. And one of the things that always amazes me in the conversations we have is the fact that we can use these properties or the rental from these properties to pay down our mortgage. Can you tell me a little bit more about how that works?
Well, this is why it's so exciting for people. I mean, you've got the feel-good benefit, you know, in what you're providing people with disabilities. They're getting a beautiful home if they're doing it right with the right provider. But also what it means is that that income, and we're talking about $900 to $1,000 net, goes towards reducing your mortgage already, if not paying back the loan on the property. And at the same time, when you're looking at the growth in property in Australia, averaging 6 to 7% every year, you know, we're talking about a $300,000 growth in equity in just 5 years. So all of a sudden it's that can be utilised to bring down, in a big way, the debt on someone's mortgage.
Yeah, and I have a property strategy that I call leapfrogging, which enables people to use that equity to get into the next property. So I'm assuming what you're going to tell me is NDIS properties allow that leapfrogging process to be even more efficient.
Well, the truth is that positively geared property will do that. You know, working in the new space, when you're working with new builds, you've got an attractive product that already is starting at a higher value. When it comes to NDIS, we actually started with promoting it more as a cash flow strategy. We weren't expecting it to deliver the growth that it has, because they are more expensive to build. So there might be a little bit of catch up initially. But the fact is, once it's completed, yeah, you do get that sort of growth. We found that with some of our clients have experienced growth up to 42%. And that's what people will benefit from when they get an NDIS investment over time.
It's really funny, I'm dealing with this issue with a family member who is in the NDIS program, and he's actually looking to move into one of these houses at the moment from a rental, which, exactly as you said, wasn't set up for the way that things are, right? We look at different parts of spectrums and different issues. Some investors might look at that as a downside. I certainly look at it as someone involved in it and think, okay, you're looking at hardened windows, you're looking at hardened walls, things like that as well. Is that something that could frighten investors off? How does that all work? And things like some property damage as well down the track too, if that happens, is that an added complexity here?
Well, when it comes to investing in an SDA, there are multiple types of builds. So you've got high physical needs, you've got the robust category. Yeah. So high physical needs, your home's really not going to look very homey just based on the equipment they need. When you're working on robust, you're dealing with properties that are built to endure, and they should be built to endure the treatment from some of these tenants. And when it comes to robust, it's a very broad category, and there's quite a broad I don't want to say the word, but it's a broad range of disability there.
Or
so it
spectrum.
won't. I wanted to say that, but I felt like I'd be, playing with the word spectrum. But that's exactly right. So you've got some that have milder disabilities, and the fact is that if a property is built well, it will be minimised. I know there are some builders who did not build to the robust category at all, which you can't get away with now.
Yeah,
So
which is
lot
such
of
a great
damage was
point, and I guess
created.
that's the difference there. This isn't about turning what you currently have
Correct.
into an NDIS facility. This is about planning from scratch to get involved from the build onwards.
Absolutely. So you should be looking at stronger walls, flooring, windows being protected, a screen across your entertainment cabinet so when they try to throw things, it won't damage straight away. So look, the fact is damage may occur and they've got to expect that.
Yeah.
But at the end of the day, if you've got a good company that looks after you and the management of your property, that is something you don't have to deal with.
And they'll handle the
deal with
damage
it,
as well, yeah.
and you just get the information about costs and then the income. And the fact is that to this day, we found that damage and repairs hasn't come to the investor as an additional expense.
Right.
So in our previous episode, we did talk a lot about, there's a lot of horror stories in the media about the NDIS scheme, and it has that negative connotation. And we've just talked about some of the great social benefits and also investing benefits. So to touch on Aaron's point, what are some of those things that people or investors should look out for when it comes to the right NDIS property for their portfolio?
Well, I'm going to base this on examples I've heard from past clients, or actually clients that have come to me looking for solutions, as well as my experience in the industry. Things you need to look out for is, if you're going to buy one of these properties, make sure that the designs will be certified before they even start building.
Well, that's a great point.
As well as
You wouldn't
being
even think you'd need to say that, but it probably needs to be said, right?
Yeah, we're aware of a builder that is having to go to quite an expense, not our builder,
Oh, wow.
to go through all of that. And then they need to be certified at the end as well. So that's one thing. A lot of people are promised high, outlandish sums of money, and then also unrealistic expectations about the fact that there'll be tenants there immediately for them, sitting and waiting. And the fact is that's not always the case. And even a client said to me, well, what do I do? It's a trust game. And the fact is, well, you should look at a bit of a track record. When it comes to NDIS, you can't give specifics because we have to protect the privacy of those tenants. So you're not going to get the same sort of testimonials, but what you can see is the data based on a company's activity to date and what sort of statistics they've got for finding tenants. I have a client who sadly was promised 2 tenants would be ready to go as soon as they signed the contract, and they based their whole loan process on the numbers, and they found out that wasn't the case. Not only were they not ready for them, they'd only get 1 tenant. So the
Right.
deal just fell through for them.
And so
completely.
there are obviously risks. One of the things I think about, and also going through this process myself, is that, and touching on your point, Andrew, in the media at the moment with NDIS, we know it's really expensive and the government is struggling to fund the huge number of people who are now involved in it. As an investor, is it something you should be worried about, that the government might be looking at a time to cut and that it may not be as reliable as it currently is?
Nothing is ever fixed forever, but what I can say about this initiative is it's there for 20 years.
Right.
And they will need to do a Mark II because the numbers in disability are not reducing, particularly in the robust category. They are growing and they're going to continue to grow for the next 20 years. So personally, I've invested in this myself. I don't see that as a risk, but it is about partnering with the right company to ensure that all risks right through the whole process are mitigated.
And again, we've been talking about a new product, so I wanted to introduce this new product to people who are watching the show today. That it's called fractional investing. Can you tell us a little bit more about that and how that applies to the NDIS scheme as well?
Yeah, I'm smiling. I'm really excited about it because fractional investing gives people who can't afford to invest in $1 million property the opportunity to get those same returns by buying a stake of that property. It's called tenants in common, and it's very unique and very responsive to what people are going through right now. It's very hard to get loans approved. People have equity in their home, but they can't invest. This enables them to do so. And the idea is that you can buy a 5% stake in a property and you can buy multiple stakes.
Wow.
And I know, and so for a much smaller
It's kind of
price
like a
tag.
horse.
Yeah, absolutely.
So between, not as much of a risk though, so between 60 to 70,000, dollars per share, you're getting into an NDIS dual key that'll give you a return of up to 12% per annum. More than that, you're also getting your name on the title. So you're going to get the benefits of growth as well as that positive cash flow. So it enables people, as I said, to access it who've never been able to get into the market, maybe they're first-time investors, people who've got leftover funds in their SMSF can invest in this. And all of a sudden the money is working for them in a positively geared way.
People looking at rent vesting as well, NDIS properties, would that be an ideal rent vesting portfolio?
Look, NDIS I particularly think is strong for people who want to retire. We've got some amazing strategies in SMSF and even outside of SMSF. But ultimately, it's about a person's goal. You can use NDIS to achieve whatever goal you're after, whether it's debt reduction in your mortgage, getting into the market is another really good way because, yes, you've got your cash flow and the growth that can then be something that down the track you may wish to use to invest in a property and not invest, actually buy your own owner-occupier.
It's one of my bugbears is that we've got this love affair in this country with property, but too many people get to retirement age and their property portfolio is not producing the income that will provide them with the returns they need to live from. So
kind of asset rich, cash poor.
Cash poor. And so the beauty of NDIS properties and even these fractional offers is that the cash flow is much stronger and therefore more likely to be cash flow positive, which then enables people to have that retirement plan to be able to live off that asset rather than just, like you said, be asset rich.
And Maria, just finally, what's been your personal experience in this? Has it been something that has worked for you?
Absolutely. I found it very rewarding for my clients, for myself. We invest in the same properties we put out there, and it's the reason I work for this organisation, in all honesty. I did my own research and due diligence on a number of companies spruiking NDIS. It was the reason I wanted to work with Property Investment Store because of their integrity, ethics, and their reliability in delivering.
And that's
those
really
ROIs.
important when we're talking about dealing with the NDIS as well.
Absolutely.
Absolutely. And, you know, I only would want to sell something I believe in 100%. And we've got the results and I'm seeing our clients achieve their financial goals through these strategies.
Any final thoughts, Andrew?
I think for the investors or viewers that are watching that it's a really positive opportunity to, like I said, generate those cash flows that people can use in retirement for a more secure retirement than just having an asset-rich position.
Maria, Andrew, thanks for your time.
Thank you so much.
And a quick reminder that this program is for informative purposes only, and always do your research before making any financial decisions. To learn more about how you can master your money, visit theinvestorsway.com.au. That's this man. You're watching Ticker. We'll be right back.
You're watching Ticker. We'll have more in just a few minutes.